We're getting ready as well for the ring of those all-time highs. And yes, you have it close to those levels at 18,900. Yes, indeed, we have hit those new record highs, Nikunj. It's taken us 142 sessions, but here we are. Nikunj.
Alright guys, you know the ring of all-time high needs some celebration. We always celebrate new landmarks and that's what I'm going to do. It's the ring of an all-time high, Kunal, and nothing captures. Yay! There you go. It's an all-time high and this always requires some celebration. So guys, you know, it's the new all-time high which is making us sound all excited, all charge it up today. This all-time high has come at a time when nobody expected it. It's been a linear move in the market. We are calling it the rally, the summer rally of 2023. In hindsight, this will just be a number which in a sense will be just a small number when you look at the aggregate picture of the index. The economy is in the right direction. Things are moving for the stock market in the right direction. India as a destination has arrived. And Kunal, for me, what really matters this time around is that at a time when markets have made an all-time high, Indian investors have participated. You know, there was a time when Indian investors were only selling and FIs were only buying. Correct. This time, FIs have bought off late, but in general, the Indian SIP investor actually has benefited. So for me, this is a bull market, Kunal, which really belongs to an average Indian investor.
Absolutely, Nikunj. And I think just to put it very lightly, how difficult it was for you to break the party pooper, it was difficult for the markets to break the new high. And finally, we managed to do it for the index. But I think it's been a remarkable last 6 months of journey. It's been 208 days for the index from the previous highs of 18,880 for the index. Again, remarkable comeback. All sectors doing pretty well. Defensives, non-defensives, high beta, all of them have done remarkably well. So I think it's complete win for the average investor.
You know, and Aisha, that's the interesting point, that where do we go from here? Trust me, a month from now, when we will look at this all-time high, the ring of an all-time high, it'll just be passé. Because markets are not going to stop here. Because the economy, I think, is galloping. Markets are just a function of nothing else but sometimes forward, sometimes backward. They truly capture the economy and earnings. And I think that's where directionally we're headed right. But for me, the standout feature, Aisha, is that this market, for the first time, I would say, Indian investor has participated via the SIP route. Number of demat accounts have improved. In terms of the FI activity, well, FI sold out in 2022, but they've come back. And that, in a sense, is a clear endorsement that the FOMO effect now is with global institutional investors. The point what Kunal need to understand is that since we made a new high after about 7 months.
7 months.
Do we stop here? Or this is a breakout which will take us way beyond 19,000?
I think we should climb up significantly above 19,000 mark. Just to put it into a context, the mid-cap index gave a breakout of the previous highs of 9,000. We are now at 9,900 in just a matter of the last 1.5 odd months. So even if we extend not a similar kind of a price performance, but even if we expect a modest 3 to 4% move on the index, on the Nifty, we are looking at least another 700 to 800 points on the Nifty, which should take us to 19,500 plus.
And you know, Aisha, that's the remarkable part, isn't it? I mean, you've had a new all-time high, but show me the participation, show me the level of excitement. There are a lot of naysayers, and that will keep on driving the market higher. I don't think we are anywhere close to euphoric levels. I don't think we are anywhere close to bubble levels. At best, you would say that markets may just chop and churn, and some sectoral rotation may start given what the setup of valuation in the mid and the small cap spaces. But barring that, I don't see too many concerns. The chink in the armor, Aisha, for me would be global markets, which are slightly puffy-duffy, and supply will it re-emerge as markets make a new high, at least in the month of July, by QIP, OFS and IPOs. But barring that, if you really have to look at the market from the gauge of valuations, for the small cap index and for the mid cap index, even for the Nifty, I don't think we are at a Humpty Dumpty level. Markets fall when they reach at a Humpty Dumpty level of valuations, when liquidity reverses or when supply is very large. I think the latter would be at play at some point in time, but for a moment today, I think it's time to celebrate and just time to endorse the fact that how a simple belief that India is changing, be with it now and rise with India. I think that story has worked like a script and as per the charm. So our commitment to our viewers is stay with us. We will help you craft a wealth creation journey.
Oh yeah, absolutely. And after many touch and go moments in the past of trading sessions, and the last time we were just shy of 2 points away. It's taken 142 sessions, but we managed to scale it up to that all-time high. By the way, the last all-time high level on the index was 18,887, and it was on December 1st, 2022. We were just about 70 odd points away from that mark earlier this morning, and we've managed to nicely scale that up for ourselves. Vishali, you've really worked like our lady luck this morning and our lucky charm. Tell me, do we stop here, or do you think there are further highs to be made?
I think I will wait for 19,200. That is the next level on my radar. So I will continue to hold my positions.
Okay. And any rates and trades that you're looking to punch as we clock this all-time high?
So, well, I have recommended Ucro Cap, and that's in the mid cap, and that's what I'm looking at. I've given the targets for 250 to 260 as a trading strategy and 225 as stop loss.
Okay, Vaishali, great to have you on the show today. Glad that you could take time out and join in. I just want to quickly revisit what the big buzzers are this morning and what's really been contributing to the market move as we scale to that all-time high. There's been a block deal on Adani Enterprises. 70.6 lakh shares have changed hand on Bikaji Foods as well. Couple of block deals coming in there. Adani Ports as well, higher by 1%. SBI is pushing forward by almost about 1%. Divi's Labs, Tata Motors, they're all pushing forward. Even the breadth of the market is quite, robust. Piramal Enterprises, Naukri, Delta Corp, MFSL. These are all names which are holding out very, very smartly as we speak. In fact, on that note, let me also welcome on board Ashwini Agarwal, founder at Demeter Advisors, joining in the show right now. Ashwini, hi, morning. Good to have you on the show. We finally scaled it to that all-time high. And that Nikunj and I were just talking about, that this time around the participation has really come in from the DIIs. Who's feeling the FOMO? That's the FI fraternity, because they didn't participate as much in this last lap of the rally from December 1, 2022, when we last scaled that all-time high up until today. Wanted to understand, do you think they're going to only play catch up and we will have a consecutive buy now from the FIIs?
Morning, Aisha. Thank you for having me here. It's very difficult to predict FII flows because they are, driven by a whole host of factors, including inflows into ETFs, which are beyond, which is not a conscious decision on part of the ETF manager. I mean, if the ETF flow receives money, they will invest. So I can't predict foreign flows. But what I will say is that India is right now the center of attention of the world. I mean, Prime Minister Modi was in the United States last week. You have the Goldman Sachs board visiting India this week. You had all the right noises coming out of Prime Minister Modi's visit to the US last week, including new manufacturing commitments from various global leaders. And prior to that, in early April, we had Tim Cook visiting India, and similar sort of frenzy, or I would say attention, was created. So the point that I'm making is that that India is certainly an attention of the world, and there are multiple drivers to that. One is that we are growing quite well and don't have any macroeconomic imbalances, unlike several other markets in the world. Number two is that, it is getting to be a bipolar or a multipolar world. And in a multipolar world, India seems to find itself positioned quite well from a geopolitical perspective, which also makes it easier for firms to making investment decisions as to where they need to go next or where they want to go next. And last but not the least, you have this huge domestic population which is going to be a source of consumption for the next 30, 40, 50 years. So, if global companies are coming to India, they're not only coming to India because it can be a good global sourcing point for them, but also because it's a very large domestic market already and in the making of a very large market. So, for all the right reasons, we are receiving a lot of attention. So what that does to FI flows, I have no idea. But yes, it's nice to be where we are.
But Ashwini, you think that at least the texture and the nature of the rally will broaden a little bit? Because what we've seen is from the last time peak up until now, it's been a very narrow market. Very few hands have actually done the heavy lifting, whereas your traditional heavyweights, the likes of an HDFC Bank, Reliance, TCS, Infosys, etc., have been very much on the sidelines.
So you're right, Aisha, absolutely. My sense is that the banking sector should be the next big mover from here. Simple reason is that the operating environment for them is about as good as it gets. Credit growth is picking up, spreads are stable. The fear about tightness in liquidity is probably behind us, and the credit cycle continues to be extremely benign. And valuations are nowhere close to all-time peaks. The only, question that investors have in their minds is that what is the disruption that fintech can cause to the traditional banks, etc. And here, at least for the private sector banks, most of them have brought in fintech into their own operations in a big way. So, hopefully the disruption is going to be fairly limited. So my point is that I think banks look very good. On IT that you spoke about, my sense is that the fears around the June quarter is probably well priced. And once the June quarter results are delivered, then you probably see things coming back to normal and these stocks participating. Simple argument here is that the US economy seems to be doing a lot better than what most of us were thinking. Rates being as high as they are in the US, there seems to be no slowdown. And I think the IT spending, which is kind of little on the slower side, has got reasonably priced into stocks at this point, especially for the larger cap names. So let's see what the June quarter results deliver. I could be wrong, but my sense is that a lot of the bad news is already priced in. So that gives us room for upside there as well from a medium-term perspective.
Ashwini, it's also been, undeniable the way the broader market has scaled up of late. Do you believe that there is still quite a bit of potential and more legs to go when it comes to the rally within the mid and the small caps as well?
Earlier Nikunj was talking about how valuations have not become stratospheric yet, and I tend to agree with him. And I think the manufacturing revival that you're seeing after almost a decade of going nowhere in India, and the kind of benign tailwinds you are seeing from transportation cost, energy cost, raw material costs are still not fully baked into earnings expectations. And even on the earnings expectations that we have, valuations are not excessive. It's nowhere close to the valuations that we saw towards the end of calendar 2017 or probably in 2007, 2008. So yes, there is room for upside in smaller names. You have to pick and choose as to what you like and where you wish to invest, because each one of us has our own biases in terms of what we like and what we don't. But the simple point is that smaller companies are still not expensive, notwithstanding the kind of participation we've seen.
So from the universe of, stocks, Ashwini, where is it that you think, things are still fairly valued, not overripe, and there's still money to be made? What would be your overweight?
So I continue to like pharma a lot. It's been my favorite for a while. And I think that pharma companies, while they have done well over the last 3 or 4 months, will continue to deliver very solid returns, because a lot of these stocks, especially in the mid-cap and small-cap space, are quite inexpensive. So that's one area that I like. I like the whole auto value chain, components and so on, where I think that you have a significant manufacturing capability at a global scale. So not only are you serving global players in India, but you are well positioned to serve the rest of the world. And raw material prices being benign, energy prices being benign, transportation costs coming off should be positive for their margins. So that's the other area where I'm reasonably positive. Third is, like alluded to, the banks and IT, I continue to be fairly positive about, but there I would favor the private large cap names. And last but not the least, individual bottom-up stories in small cap space, which are either the disruptors or are, going to grow for the next 5, 10, 15 years. I mean, that's the place to be.
Ashwini, how are you looking to play this very promising manufacturing theme that a lot of experts are bullish on?
Auto components primarily as at this point. I think the defense valuations are very, very high in my personal opinion. So the defense and railway story, has played out. The order books are still swelling, and who knows, I could be wrong looking at valuations, but a lot of the execution has to happen. And when the government of India or PSU world is your primary buyer, we've seen in the past that disappointments, happen because execution doesn't keep pace. So, this time could be different. But, defense and railway oriented theme, I think, has played itself out. So I'm playing it through a little bit in the chemical space where input costs are now softening. So you've got to look at downstream chemicals rather than upstream chemicals. And I'm looking to play it through the auto component space.
Ashwini, what could spoil the party right now for India?
Who knows? The fact is that we've had a nice run. The fact is that markets never move up in a straight line. So you are overdue a 5-7% type of a correction, maybe even 10%. So who knows? The triggers are always visible only in hindsight. But from a time and the length of the rally perspective, you could see a 3-4% upside, but we are overdue a correction, and the reasons could come out from global developments. They could come out from somewhere else. I don't know. Who knows? I mean, Aisha, very, very difficult to comment on that. I think there was some fear that poor rains and poor monsoons might lead to rural income remaining subdued. So let's see how that theme develops. And of course, over the next few months, we'll start to shift our focus on politics and the big event in the middle of next year. The consensus forecast at this point in time obviously is that no danger to the BJP coming back. But if that narrative starts to look a little bit uncertain, that could be the other reason that might take the sheen off the markets. Who knows? There could be multiple things.
Ashwini, your struggle to scout out party poopers only gives me more confidence on the India story and, of course, the market strength as well. But anyway, that aside, the one underperforming pocket has also been IT. While, it's not really an apple-to-apple comparison, but if you look at some of the tech-heavy NASDAQ names, for instance, they've scaled up a whole lot. And of course, now in US, the story is around AI. That's where the narrative is, and that's where all of us are headed in terms of, technology transition. Wanted to understand whether the worst for Indian IT is now behind us, and would you recommend now nibbling into this sector?
So, Aisha had alluded to this earlier in our conversation that, the June quarter results are going to be quite telling. My personal view is that a lot of the bad news is now priced into the underperformance already. I think growth rates are not that exciting for sure, but the valuations are quite appealing, and the free cash flow and dividend yields are quite supportive. So I don't see a lot of downside from here for stocks. Will we see a lot of upside? It depends upon how the June quarter plays out and what companies say about the rest of the year. One area which is still kind of bothering me a little bit is potentially a stronger INR versus the USD. So whether it's a weaker USD or a stronger INR, let's see how that narrative plays out. But a lot of the IT services companies have their earnings significantly pegged to the US dollar, and that could be a risk that's still not priced in. So let's see. That's the only thing that I'm really worried about. The slow growth is not something that I'm so worried about. And I think IT stocks will bottom out once the June quarter earnings are out of the way. I haven't made up my mind, should we buy into the results, going into the results, or should we wait for the results? I'm still struggling with that. But yes, I'm paying a lot of attention to that space right now.
All right, Ashwini. Thank you. Thank you for joining us. Ring of all-time high. I can keep saying the whole day because I like the ring. 20,000, you're not to stop here. So 19,000, I beg your pardon, you're not going to stop there. Trust me, market ultimately represent economy. Economy is a function of earnings. And if earnings are moving in the right direction, markets are going to move higher. Are we likely to, could we hit a pause button? Could we go here and there for next few days? It may well happen. But I think directionally, if you still think about it, in this rally, there are three things which are common. Number one, low participation. No euphoria in terms of valuations. And number three, the SIP investors again have been rewarded for their patience. So this rally belongs to what could be called as the true spirit of Rise with India. And if you believe in India, well, stay put. This is just a number which ultimately will be remembered as just a pit stop, nothing else. Just even not a dot or a comma, just a number. Ramesh Swaminathan joins us, Executive Director with Lupin. Let's say hello to him. It's been a while. I haven't interacted with him. How have you been, my friend? Long time.
Yeah, indeed, it has been a pretty long time, Nikunj.
Well, you're interacting with us at a time when, in general, the excitement is back in pharma stocks. Everybody thinks that the worst is behind pharma, the worst is behind Lupin, and अच्छे दिन आने वाले हैं.
That's absolutely true. So a lot of things are actually moving for us at this stage. We are in the process of actually launching Spiriva, a pretty big drug in America. Perhaps in the next quarter, and that would certainly be a big one for us. There are, of course, a few other molecules lined up for America. So all of this will certainly move the needle insofar as that particular market is concerned. And given the fact that US is about 35% of our overall turnover, it certainly is going to make a difference.
Why has Lupin gone through this huge cyclicality and downturn, both in terms of pricing, margins, and their inability to move up the complex platform? I mean, last couple of years, Ramesh, let's be real, I look at the declared numbers and they've been tough for Lupin.
Yes, that is absolutely true. I think for starters, what was actually a 65 billion generic market, actually eroded over time to about $56 billion. In net terms, obviously, it's a little lower. And that is principally because the fact that there was a channel consolidation out there. So much for the macro picture. We are also kind of besought with, in fact, a host of problems on the, on the factory front. So 5 of our factories were, had in fact issues with the FDA. We got out of 2 of those, over time. 3 of those are still pending. That actually meant that a host of products that we had lined up for launch could not potentially be launched, and there's of course the COVID times also that again, put paid to hopes of, a fast, coming out of the issues that we were facing with the FDA. But things are now looking much better, and we look forward to, in fact, moving the top line in America. And of course, the other issue was the fact that there are a lot of inefficiencies which are crept up over time because of supply chain issues and the like. We kind of addressed those as well. A lot of those related to FTS because of supply chain issues. Get stock write-offs and the like. With idle time at the factories, we kind of downsized. We kind of invested ahead of the curve. All of this actually meant that while the top line was not moving, the overhead base was certainly going up. That meant that the margins were kind of shrinking. And of course, we've kind of addressed a lot of those. Still some work to do, but we are on the right lines.
Ramesh, hi, morning. I'm going to talk about Spiriva and talk about all the points that you talked about right now in greater detail. But let's pick up on the point on margins first. How is it that you intend to fix your margins, which have been on a sort of declining trajectory for a while right now? Because there's been a conscious call by you guys at Lupin to drop several low-value products from your portfolio. Is that a conscious call? And would you now, or is this now going to be a strategy?
Yes, that's one of those things that we were, one of those initiatives that we had taken. There are several other initiatives, of course. I spoke about a lot of those relating to the cost. Whilst we're also addressing the portfolio itself. Because of price erosion in America of a very different kind, a lot of those products turned out to be negative margin products. So we rationalized the portfolio and dropped quite a few of those. And that obviously would make an impact in some ways. That would actually mean that some of these capacities that we have built up for the future might not get utilized fully. So that is work in progress in terms of looking at the footprint in respect of that. But as I said, the most important thing that was actually plaguing us was the fact that the top line in America was not moving. So what was about $1.1 billion business about 4-5 years ago had shrunk to about $600 million, right? It is only in the last couple of quarters that has actually been moving up, closer to the 100 odd millions. So that actually was indeed the problem. The lack of, in fact, our ability to kind of bring products to the market. We, of course, were working on, in fact, a host of complex ones, essentially the inhalations portfolio. We brought in albuterol. That, again, was a clear indication of the fact that our progress on that is what it is. And we're now following up with, in fact, Spiriva. We also launched Foster in Europe. All this is clearly an indication of the fact that our respiratory portfolio is pretty, our ability to kind of launch products there is very high. In the meantime, we are also working on more complex products on the injectables front as well. That's still work in progress, and I would save it for, in fact, a later day when we actually could discuss that. It's not to state that there are no other products, that there are no other products. There is, in fact, a pretty rich pipeline, which is there for the OSD business itself. But the OSD business I just mentioned actually has, in fact, there has been a delay because of the fact that we couldn't launch it over the last couple of years, and because of the potency of some of these products have been lost. But there are still some which could potentially, gain us some business over the next few quarters.
The Spiriva approval has come in definitely ahead of the timeline as was being predicted earlier. But tell me, what could it mean in terms of incremental revenues for you, Ramesh?
It's a pretty large molecule. It's about 1.2 billion in gross terms. And after giving the normal discounts and so on, it's a lower figure. But having said that, given the fact that there's actually an exclusive product for us, limited competition, so to speak, for at least a couple of years, we do believe that we will be able to get pretty decent market shares and really move the top line.
Ramesh, so let's understand the 35% generic portfolio. That's what markets always want to know. 35% is US. How much of that portfolio, which is 35% of the total kitty, is going through pricing pressure, has gone through pricing pressure, and will see an uptick?
Okay. A large chunk of that is principally OSD. We also have, in fact, a pretty, robust pipeline and, in fact, inline products on the inhalations front. When it comes to inhalation front, the overall, the price erosion is very minimal, so to speak. Whilst the OSD business actually has seen pretty rapid decline over time, it has stabilized in recent times, more particularly in the last 2 to 3 quarters. It's, I would say, high single-digit numbers. And that's the way it's going to stay, because essentially a lot of the companies have realized that it doesn't pay to kind of have a pretty and compete with each other in that sense, and have been dropping products. We've also been doing something very similar, and because of that, I imagine that the price erosion is going to be contained. But it really is important for us to go into to pivot to more complex products, the inhalations piece, the injectables piece. And that's where the action really is.
Is it true that in your bid to, unlock value, you may be looking at spinning off the API business?
As a progressive company, we obviously look at a lot of things, and obviously no decision has been taken on this. We're looking at it, and it's pretty early days to even comment about it. So anything that the street is speaking or the media is reporting is pure speculation at this stage.
Yeah, but just to understand, of course, as you're saying, it's very early days. If this were to potentially happen, what would be the rationale of the move?
It's difficult to conjecture at this stage. The fact is, there's a China plus one strategy in the offering when it comes to API business itself. We have the capacities, and it might make sense at some point of time. But as I said, no decision has been taken. So it is. I would say wait and see.
Ramesh, tell me, now with Spiriva in place and your India business as well in a pretty stable position, can Lupin exit FY24 with, say, a 20% kind of EBITDA margin, given that, all the approvals come in?
You're absolutely right there. If you look at, in fact, the last 3 quarters, our EBITDA margins has been going up. It's in line with the way we actually had guided the market. We expect this trend to kind of continue. What had really happened was that the top line was not moving, and given the fact that we have products that are going to be launched in America, we have Spiriva, we have Vernicillin, we have Darunavir, which is also an exclusive product for some time. Things should certainly look up in America. So if you look at India, that's last year was a bit of an aberration because the fact that we had loss of exclusivity in certain products. So overall, while the growth was there, it looked, in fact, a little lackluster vis-a-vis the market. But believe me, it actually is doing well. And of course, given the fact that we have added about 1,000 more medical representatives, feet on the ground, this will also contribute. And of course, the rest of the geographies, if you look at the emerging markets of South Africa, Philippines, Australia, all of these are doing fairly well. Brazil is, of course, turned the corner. We've got a pipeline for Europe as well. We have Namuscla, we have Foster that we launched in mainland Europe. So all of this will certainly move the needle for us.
Now, Ramesh, I want to go back to that whole speculation which Aisha and you've discussed about API. My point is that today API is not the fat margin business for Lupin. Lupin is moving up the value chain. Historically, markets would say keep the margin business away, keep the fat margin business separate. It makes logical sense for Lupin to perhaps separate both these businesses so that the volatility of the API business does not impact the real richness of the complex business. So logically, it makes sense.
Well, of course, we have also thought about it on similar lines. So that's one of the arguments that has been put forth. But as I said, nothing has really been decided. It's too early days to kind of decide, to even talk about it.
Ramesh, tell me, what is going to be your acquisition strategy? Because, post Gavis, one thought that it will be a conscious strategy to go for bite-sized acquisitions. But that doesn't seem to be the case.
It's not fully true, right? Because we have been looking at, in fact, bite-sized acquisitions in the recent past. So we bought into product portfolio in, the Apple portfolio in India. We looked at acquisitions in Australia. We have, of course, things into injectable pipeline in Europe. So we are looking at it. Obviously, we are a lot more calibrated in our regression these days. We don't want to actually look at something pretty large ones like Gavis, which happened some time ago, or for that matter, Solosec. Those because essentially we also realize that the specialty certainly requires it's perhaps the way to go in the years to come. But having said that, it also calls for a very concerted effort in terms of building up skill sets, the pipeline for it, and so on. So it's going to be a lot more strategic thinking going into it. But it's not for the immediate future, so to speak. But we are looking at bite-sized acquisitions in various parts, including India. And if the proposition is compelling enough, we'll certainly look at it.
How are you planning to fix Gavis and reduce the burn in the US business?
Gavis was stymied with a host of problems, essentially because the narcotics market itself, had declined over time because of overusage in America. It was just about the time that we bought into it. But since then, we've actually been assiduously working on a pipeline for the Somerset facility. And given our emphasis on certain products like Gavilite, or for that matter, Suprep, and so on, it's done fairly well in recent times. And with, in fact, more products going to be launched from that facility, it will certainly do much better than in the recent past.
The other thing I also wanted to talk about, Ramesh, is, in July 2022, March 23, you got approvals for 5 plants. We understand that work is left to be done on at least 3 of those. Could you give us a timeline and exact status on what's happening on your new plans?
You're talking about principally, the OAI on Tarapur and on Mandideep, I would imagine, and of course on Pithampur, the Unit 2. We have been working on all of those. So we have actually submitted our replies back to the authorities. We do believe that it's a question of time before all of this gets removed, and it's going to be business as usual insofar as these plants are also concerned.
Okay, Ramesh, really good to have you back, and certainly hope to see much more of you going forward. Don't go in hiding again, Ramesh.
Of course not.
You want to hear your views? You want to hear your views again?
Yeah, we would be available. Thank you very much.
Thank you very much, Ramesh. Always a pleasure. Now, what do we have on the markets? Let's unlock the bull. All-time high. All-time high on the Nifty, and it's happened after 7 months. The difference is that the components which have taken the markets higher this time, there you go. Will it go to 20,000 in July? And it's
a golden bull. Don't miss.
Yeah, I mean, Nifty and India is in this golden era, so we've chosen the color to be golden. That represents the kind of golden era we are going through. So it's a thought which has been done with purpose, Aisha. It is just not a coincidence.
And that's our new pin code, 20,000.
Why not? Just think about it, Aisha. Now you may say, okay, 20,000 sounds like a very fat number, but if you even at an all-time high, the Sensex now is not far. Sensex has hardly given any returns, or the Nifty has hardly given any returns. Let's look at the YTD chart of the Nifty. And if you look at the YTD chart of the Nifty, what do we have on the Nifty? On the Nifty, this year the returns are what, 4%? That's it. 4% return, which means that if you are in for a double-digit return, which is in line with the long-term averages, you can easily add another 4-5% by the time the year unwinds. And you go another 4-5% by the time year unwinds, you will be pretty much in and around that 20,000 mark. So 20,000 mark, 1,200 points on a mathematical base of 19,000 now is actually not a very large number per se. But I think this is what is important, that this high has come at a time when nobody expected it, nobody anticipated it. Very few have participated. Valuations are not stretched. There is no euphoria. There is no excitement. And this led us a lot of disbelief. Classic signs why market should go higher. Disbelief, no euphoria, lot of concerns and a lot of naysayers.
Yeah, and look at what's supporting our market, at least in today's trading session. You have the Adani group of stocks that are doing their bit. There's the likes of Reliance Industries at 2,500 plus levels. Lots of names within the financial space. So at SBI, as we spoke about that, a little bit of a comeback there. You've got an IndusInd Bank as well that's in the limelight on the upside. And of course, the HDFC twins continue to drive the move on the upside. Add to that list an ITC as well. Stellar up move off late. It's been one of the key contributors since December 2022 as well, and today is no exception. At nudging at those levels of about 450 is where the stock is currently at. So all in all, healthy market breadth, broader market participation, and a print of 18,896 on last count. But time to shift gears then, and let's focus in on the entire infrastructure sector and discuss the outlook in terms of companies as to what the view is when it comes to order book as well as execution check. Joining in, we have with us Prahlad Bhai Shivaram Bhai Patel, CMD and CEO at PSP Projects, Manan Shah of Man Infra, as well as Pavan Kumar Gupta, CMD at NBCC. Thank you all, gentlemen, for taking time out and joining in. Mr. Shah, I wanted to get in your views first up. What's the outlook in terms of the overall demand for the infrastructure sector, and how are you looking at the on-ground outlook?
Morning. So currently we are expecting a lot of new orders in infrastructure coming because there's quite a special demand which is being generated in the port sector, which we are seeing near Dhanu. And I think the work size is going to be significant, and we are seeing a pipeline for next at least 5 to 7 years of inflow coming in from there where we wish to bid for. And at the same time, last week we just won another port contract award for finishing and pavement and doing some infrastructure over there. So we are very, very bullish on the infrastructure side, where we expect the government also announcing a lot of new infrastructure orders coming in, especially in the port sector.
Mr. Patel, how would you sketch the big picture for us in terms of business and in terms of outlook for next 3 to 4 quarters? Mr. Patel.
Now, there are so many projects which are also coming up in building, right? Whether it is from the government side or whether it is from private side. If you see from the government side, our Central Vista project is already on, and about out of that 20,000 crore, only about 8,000 crore has been announced till now for the tendering stage. In redevelopment side also, if you say there are so many other projects which is coming at private sector and the government sector, the buildings which are getting older, that is also getting demolished and new secretariats are being built. In UP, we have just heard the tender for the architect has already been announced for more than 3,500 crore for this new secretariat. In private sector, as I always say, that investment from Adani, investment from ArcelorMittal, investment from Reliance, all more major.
We've got you on a bad audio line. Maybe the Bombay rain are having impact on the connectivity. I promise we'll just get right, back to you. But I'm going to connect with Mr. Gupta, Mr. Pawan Kumar Gupta. Mr. Gupta, NBCC is not a pure builder, but it is a developer. If you really have to explain that what is happening to NBCC's business, especially the projects which you're developing, the contracts which you're giving to the developers, how would you characterize the big picture for us? Mr. Gupta? There is a bit of a, huge audio problem. Please. Would you like to respond to my question, sir?
You can tell we can't see you.
We can't see you.
Sir, I can see you and we can hear you also. Would you like
visible.
To go ahead?
You are audible but not visible.
Yes, sir, but we can see you. You're live on television. Would you like to go ahead with my question, sir? We can see you and we can hear you, sir, so no problem. Okay, what is happening to NBCC? Can you tell us the big picture, Mr. Gupta? I think we got everyone on a terrible line per se. Broadly, the construction industry, the business which you represent, it's a tough industry. It's a cyclical industry. But what we understand after we do a ground check is that right now there is more demand and less supply. And for premium builders right now, margins are also, there are more orders and there is less availability. Is it true?
So I agree to that because your delivery record is something which is very, very important in today's market where if you've done the ground check, like you mentioned, we've delivered more than 15 projects all before time. And that's something which speaks for itself. And because of that, customers have shown tremendous confidence on our brand and it allows us to have much better price command, much better grip on the market. And in fact, we are able to sell much more faster, having a better realization at a much earlier year. So I believe that the segment is doing quite well in terms of real estate and even infrastructure side, where the numbers have been speaking for the past, in fact, quarters for us. And we even see a much better, the coming year also seems to be brighter, where we, expect the velocity to continue and go on for the same.
When do you see the cyclicality of this business playing out, Manan? Because ultimately this is a business which is also deeply cyclical. It's a business which ultimately is a cost plus business. How do you see this year or next 2 years being different from last 2 years?
So this year, in fact, the project sizes for us has increased, drastically. So compared to small redevelopments, we've achieved and one project which are much more larger in size comparatively. And at the same time, the project tenure is also more. So we are seeing much more stabilized incomes coming in and see a continuous momentum happening over there. In terms of cost, post-COVID, some bit of cost has been increased, but I see it getting set off by the price increase which we've realized in the past few quarters, where a lot of premiums have been paid by the customer for good properties, where they've been showing confidence, and the price has been increased probably by around 12 to 15% on year-on-year basis.
Mr. Gupta, give us a little bit color on, what's been your observation on ground, given that, you're not just a contractor, but a developer, so to speak, NBCC? I don't think Mr. Gupta can really hear us. Aman, you want to try that?
Yeah, Mr. Gupta, maybe you can unmute yourself.
Hello.
Okay, we'll avoid that. Mr. Patel, let's get in your take then in terms of the outlook, in terms of what you're seeing in the macro market, in terms of demand. Which regions are you seeing driving the growth for infrastructure and construction companies? This is for you, Mr. Patel.
Yeah, thank you. See, the market drive is mostly coming from the government side as well as the private side. See, if you see the government side, when the projects related to tourism, projects related to redevelopment of government offices, these are coming in large stages. Like what we see is Central Vista project already been announced, and about 8,000 crore work has already been done. So still 12,000 plus crore tenders has to come from Central Vista. If you see about Gujarat, once this Olympics 2036 bid is announced, there are so much development has to come from sports that manage the sports enclave of Ahmedabad. 4,600 crore investment already been announced. If you see on the tourism side, we are already working on this Daroi Dam where we have already won one order, and there are still two more orders to come. So in total, it is an investment of 1,200 plus. Again, tourism and the Statue of Unity, there are two more museums are going to come. When we talk about this private sector, as we are working with Ashramitra, we are also working with Adani. Their capex already being announced, is still working on, and probably this will go from here for minimum 1 or 2 years. So there is a huge demand from the market, whether it is private sector, whether it is government sector, or whether it is real estate developer. In Ahmedabad, if you say this 100-meter height is allowed since last 6 months, last 1 year, and now so many iconic projects are coming up. So I personally see that from whether it is private or the government, there will be huge opportunity for most of the contracting firm like us.
Okay. Where is the growth, specifically coming for PSP? Is it government? Is it railways? Is it roads? Or is it private builders?
Specifically, PSP is purely into building construction, so growth has to come from building line only. But whether it is from government side or private side, usually the private projects are of a less volume. So I think the growth for PSP will be more on the government side. But till now, our order book has been ranging between 60 and 40. Sometimes 40 is private, sometimes 60 is government, and vice versa. So it can not be envisaged perfectly, but in all the economical growth of the country, what we are seeing, I presently see the development on education, medicine, tourism, all these three sectors we are seeing, and redevelopment. If all we see onto this sector, I think there will be huge expansions to come from government side.
All right, gentlemen, good to have you on board. Thank you so much for joining in and giving us a perspective as to how things are shaping up within the overall infrastructure sector and the construction activity. All right, with news that the index is perched at the 18,088 mark, we'll take a quick break right here, 888 rather. We'll take a quick break right here. Be right back.